What's happening, YouTube? My name is Mike. This channel right here is Health and Wealth. Thank you so much for joining me today. Today's part 3 of 3, where we talk about how you can make $1,000 a month using just one ETF. So far in the series, we've talked about Nvidia, we've talked about Coney. Today, we're talking about everyone's favorite, MSTY or Misty. Now, what you're about to hear and see is all made up numbers. This is all potential, right? This is potentially what you could be making if you put a certain amount of money into the fund. Now, so many factors can take away from this. So I want you to understand that the numbers could change from what we're looking at. But if we look at historical figures, if we had a certain amount of money in the fund, then we would have been pulling in at least $1,000 per month. So I want to go over all of those numbers with you. I want to go over, what could happen in the future, and I want to go ahead and make this a monthly series. So the first one was on Nvidia, NVDY. Second one was on Coney, and the third was on Misty. So what we'll do every single month is we'll take the distribution that they've announced and say, what if we had a certain amount of shares? What would we have needed to make $1,000 this month, right? So the reason I think this could be important, but also entertaining for you to watch, is because it's nice to have that dream. It's nice to think like, wow, if I had this, I could do this, right? Now, one thing that I want you to be aware of is that share price with the YieldMax funds is a hot topic, right? Share price goes down, goes up, depending on the underlying and the overall market itself. So today we're talking about MSTY, and over the last month or two, the share price has been dipping down. Whereas if you looked at something like PLTY, the share price has gone up. So has Palantir, which is PLT's underlying. So MicroStrategy is on its way down. Bitcoin is on its way down. There goes the share price with it. On top of that, sometimes YieldMax, it appears that they pay out too much money, and that also diminishes your share price. So these are things to factor in. This is not risk free. And in fact, this is high risk, what we're talking about here. So if you don't have a tolerance for high risk transactions, then this would not be the right fund for you. For me, I'm not a financial advisor. I'm just some guy on YouTube, hopefully entertaining you. And if I do, consider hitting the subscribe button with the other 3,200 people that have done that. I'm trying to get to 5,000 before the end of this year. I have a feeling we're going to get there in the next couple of months, but that's a lofty goal for a long time from now. Let's see how fast we can get that happening. All right, so I've gone ahead and thrown some numbers together here, and we'll go ahead and bring my face down, and I've got an Excel sheet here. This is showing us every single distribution that Misty has paid out since its inception. So we're already at 11 months of payment, and the latest payment, which is going to be coming out on Friday, the day of love, February 14th, is $2.02. So we're going to kind of have that in the equation. We're also going to have the average in the equation here too. So far, Misty has paid out $31.79, and that is in 11 months, which is absolutely crazy considering the share started at $20 per share when it first came out in April. Or sorry, when it first paid in April. So it probably came out in March. That's my guess. And its first payment was April of last year. So the average between all of these, if I go like this, is $2.89. So the average is $2.89. You can see I have that up here on the right-hand side. So we're going to go over two scenarios. Scenario one, if I had 495 shares and I multiply that by this month's distribution, which was $2.02, that would give me $1,000. The other one is 346 shares at the average of all of the distributions. That would pay me $1,000 as well. So you think to yourself, that's a lot, right? That could be a lot of money. Well, let's take a look at the share price itself. So today's share price is $24.51. Let's do that math. Give me a second here. I'll bring it up here for you. What was it? 24.61. Let's multiply that by 495 shares. So you're looking at a $12,000 investment in, well, $12,181 investment to make that dream come alive. And then if you look at the average, right, the $2.89, that's actually going to be less money for you to initially invest if the average was to continue to pay out, right? So 346 shares. But yeah, you're looking at well, hold on, 346, and I got a terrible short-term memory. What was it again? 2451. My bad. 2451. So you're looking at an 8,000. That's a heck of a lot better, isn't it? So if Misty can continue for the next 12 months, 24, 36, 48 months to pay out the average of what it's done so far, then you're looking pretty good. So what I've done is I've put a calculator here together, and I want to just click on one more thing here. Yes. So what I've done is I've put the bottom one here, the $2.89, the average distribution. So I've gone to marketbeat.com. If you want, you can join me here, and then you can kind of do your own numbers. I think that's probably a good idea. I put individual stock. I did say monthly distribution, and I did turn the drip on for this example. Drip, if you don't know, just means that your brokerage will automatically reinvest the distribution that you receive, put it right back into the fund, and buy shares for you. So I've gone ahead and chosen 346 shares. Is that number right? Yes, it is. 346 shares. Share price, give or take a couple cents here, 24.78. I said no extra money is going into this fund at all. I did say there's a 15% tax because that's what it is for me up here in Canada. The initial annual dividend yield, that's a magical number of 142%. Just so you know, right now, that number changes all the time. Today's number is 98%. So that number does change all the time. So this number might be a little inflated compared to what it is today. I said zero expected annual dividend increase and zero share price increase. Let's keep it the same just to keep it familiar. And we'll calculate that. So we're putting on a 5-year timeline. And we'll go from the bottom and work our way up here. So your initial shares owned were 346. Your annual dividend per share 34.99. Your annual dividend would be $12,000. Divide that over 12 months. You're looking at just over $1,000 a month. Now, if you were to drip this, which means you're just repurchasing shares, right? $12,000 goes and repurchases shares. At the end of that year, you now have 1,187 shares, which is absolutely ridiculous. You've more than doubled your share count by far. So your new balance 29,000. This carries forward to year 2. And I'm not going to bore you by going through every single one of those numbers, but I really love going to the picturing the dream at the end of 5 years, right? So look at the amount of shares you have, and then your annual dividend, $1.67 million, and your share value after is $4 million there. I don't know about you guys, but for me, the risk of, let's say, $9,000 is not that big for me, and maybe for you, but for some people it is for sure. But for me, risking $9,000 to see what happens in 5 years, and let's just say everything panned out exactly how it's gone over the last year here, having an after drip value of $4 million for a small investment of $9,000, that would be incredible. And for me, I think that risk of losing $9,000 might be worth it. And is this a sense of gambling? Maybe it is. Maybe it is. But am I okay to lose $9,000? For me personally, yes, I would be okay with that. What are the negatives that can happen here? Well, the share value could dip dramatically. Bitcoin could fall off a mountain. MicroStrategy could be mismanaged and become not a company at all. These are all the negatives, right? And so then the share price of this goes down to nothing. More negatives is that let's call it strategy. Strategy dips, Bitcoin dips, And then therefore your share value, this share value right here, dips, and then YieldMax has to do a reverse split, 5 for 1, right? These are all of the negatives that could happen to your money. But again, for just under $9,000, we could be going ahead and 5 years from now have a total of 4 million. Now, let's avoid the 4 million for now. Let's think about your $9,000. Do you guys think in 5 years that your money will have grown if everything just kind of stays the same or even slightly worse than it is right now? I feel like it is. But again, the goal of this video is to go to $1,000 a month. So if I turn drip off here and then recalculate that, you're going to notice the numbers are quite a bit different. Every single year, you're getting the same amount. Of course, there's no changes like I've been talking about, even though there will be changes. But every year, you're getting your $12,000, which is darn good for an investment of just under 9,000. That's for sure. Let's change up the numbers though. Let's go to something a little bit more realistic. Let's go to what it is today, which is 98%. So 98%. I mean, I know I can type in 98% here, but once you hit that down arrow, you don't want to stop. So 98%, let's turn drip back on. And this time we're changing our shares to 495 to make sure we get to that $1,000 a month. So 495 shares, that's quite a bit more. It's a bigger investment than what it is right now, right? You're looking at 12,000 instead of just under 9,000 to get there. But it is a more conservative percentage compared to its average over the last 11 months. So no changes here, just drip. I want to make sure I got it right here for you. How many shares was that again? Or how much dollar was that again? $12,231 to get that amount of shares. And you can see here, there's very close to $1,000 a month, just a little bit underneath $1,000 a month. But I mean, within a few months of it reinvesting itself back in, you're going to be over top of that, right? New balance at the end of the year, 28,000. And then that just carries forward from year to year to year. I do want to spend a little bit more time with this example because it is maybe a little bit more realistic. And I just want to make sure you guys are totally understanding that this is kind of like pie in the sky type information because things could dramatically change. So before you put your money in, understand your own risk, understand the negatives. What is the downside? What could happen to my money if I did this? And if you're not a sound investor, you probably want to seek the advice of a true professional financial advisor. And I know that they're most likely going to say no to this option right here. That's for sure, because they mitigate risk and they think, wow, this is a risky solution that you're thinking of here, Bob. But take a look at the end of the 5 years here. New balance, $868,000 compared to the other one, which was $4 million. Holy smokes, that's a massive difference. Now, what I'd like to do is change this to 10 years, and then let's go to 15 years after that. So there's 10. You're you're just at $62 million, no big deal, at the end of 10 years. Now, most of the people watching this video are in the range of 25 to 65. So think about yourself at where you're at right now. How many years do you have left where you want to invest your money? Do you have 10 years? I know I have 10 years. 10 years is when I do officially want to retire. So if I had this in here for 10 years, would $62 million allow me to live the life I have? Yes, it would, right? But 2 million would allow me to live the life I have. And that's after 6 years for this smaller version. But again, can this keep its pace, right? So let's go take a look at all of the distributions just to see where it's gone. There's the beginning, 413, 252, 303, 233, 194. So they had a couple smaller months there. Then they went back up to the big months when Bitcoin was going up. 308, 227, and 202. You see the trend here, right? It's on its way back down. Bitcoin here over the last 6 months has had an astronomical climb, right? We're up 62%. But if you look at the last 3 months here, 4 months, November 13th here, 87,000. And since then, it's only gone up 9,000. So that's going to be slowing down the volatility of MicroStrategy's options, right? And so Mister itself in the last 3 months also slowing down. There's November 13th, right there, 328. And so since November 13th, it's actually gone down just $2, but pretty darn volatile. In fact, it's the most volatile stock on the S&P 500. So for me, I feel like MSTY, out of the three of them, Nvidia, Coney, MSTY, is the most volatile, where you can get the most action, in that initial annual dividend yield is probably going to be the highest long term because of that volatility on Mister. So this is my breakdown on $1,000 a month. Let me know how you feel about this. Would you invest? If you had a smaller account, would you invest $9,000? Would you invest more than 10% of your capital into MSTY and put it on drip and set it and forget it? I'm currently doing this for Coney. I put $2,900 into it. It's not going to get me $1,000 a month. Right now it's around 200, 250 a month. But I'm setting it and I'm forgetting it for the next 5 years. And I'm not doing it right now with MSTY, but it's definitely fun to think about, isn't it? So if you enjoyed this content, you're probably going to love this video right here on MSTY. 13,000 other people did. Give it a watch. My name is Mike. This channel is Health and Wealth. I hope you have a great night. Bye for now.